look at the great debate between gold and Bitcoin. You know, the your granddad's money, okay, and
Yeah.
the new kids, hey, we crypto. The granddad's going to win the debate. It has
Yeah.
lasted for 3,000 years. Silver and gold will. Well, look what they've done this year. I mean, they're only now getting headlines from CNBC and networks like that where they're
Yeah.
saying, "Look what gold's done. Where have you been?" It was doing that in 3 months into the year, 4 months into the year. Now we're in the 10th month of the year, and you're finally acknowledging.
I know. It's unbelievable how
No, it is.
one-sided their coverage is of Bitcoin and the Nasdaq stocks versus gold and everything else. All, Bitcoiners would say, "Hey, go back 3 years, go back 5 years, go back 10 years. Bitcoin's destroying gold," right?
Well,
Obviously, this year,
actually, when you measure it since 2021, it's not. Gold is holding its value versus where it was then. Yeah, you go
okay,
back further, and yes, it is. Yes, you're quite right.
yeah, yeah.
Okay.
But I see your point. So lay out your thesis for gold and
Mhm.
silver. Let's start with gold. Obviously, it's just on a rip every day, new all-time high. Where do you see it going?
Well, I'm not sure where it's going, but I suspect there's one level it'll at least see, and that's 8,500 area on gold. Now, there's a couple charts I sent you.
Hmm.
And the first chart shows a logarithmic scale, a ratio scale chart of gold going back to 2015, 1975, excuse me, when the federal government allowed us to own gold again. Okay.
Yeah,
That was very nice of them.
very kind.
Anyway, we've had two major bull markets in that 50-year span with external conditions that are nowhere near the dynamite conditions we've got in terms of factors that could drive gold. Both were eightfold moves in price, bear low to bull high. No matter what the price, the different duration trends. One was about 3 years, one was at 10. Okay. But the moves were the same, eightfold. Our bear market low, last one was $1,046, 1,050 in 2015. Okay, we're only halfway the dimension of the upside of those two prior bull moves. You can see it on the log scale chart at the top, which is the gold
Hmm.
chart. If we were to match those two moves, just don't say we're going to do it again, okay, good, 8,000 plus gold. Okay, now that's just compared to the old bull market peaks. Now it may not stop there because these factors we're talking about are horrendous, especially government debt, not just here, but Japan, elsewhere. That game is yet to explode in terms of its real
Yeah.
world consequences.
Hmm.
Uh, my own personal assessment and portfolio is emphasis on silver now.
Okay.
Silver moves with gold, but it sometimes lags, sometimes outperforms. Usually it lags. Okay. Now, this year it hasn't. It's actually up more year to date than gold is. Okay.
Hmm.
By a couple digits. Okay. So it's significant this year. But historically, it's still very low relative to gold. Like silver's trading at 1.125% the price of gold right now.
Hmm.
We,
Yes,
we do
80
it.
to 1. Is it still
Yeah, no,
70
we
to 1,
don't do
80
it
to
that way.
1?
We divide an ounce of silver into an ounce of gold, express it as a percent. And if you go back over that 50-year span of time, we don't show it here, but silver in 21 of those 50 years that we've had has at least been 2% of the price of an ounce of gold, minimum. And in bull trends like 79 to 80, or we're in a bull trend now, right? Okay.
Yeah.
Or in 2010 and 11, silver was 3% or more the price of gold. So right now at 1.125, silver is very cheap relative to gold. But it's technicals of that spread relationship. And we study it, the week by week, month by month, and we run momentum of the spread. Momentum is now breaking out. It's telling us the spread itself that is rising, favoring silver since the beginning of the year, or especially since April, by the way. No, since April, sharply. It still hasn't broken out on the spread, but the spread, you get above 1.31% to get bean counting for you.
Yeah.
And we're headed toward that level. You're going to blow out like a 3-year high on the spread, in which case you're going to go. You're going to rush. Why is that important? That is the prominent indicator back in the 1979 to 80 surge, this final 6 months of that move. Silver had already been going up for years, so had gold. But suddenly in late, in summer of 1979, that spread broke out. of a situation that looks just like now, in other words, a potential breakout level, silver versus gold. It's at that point that the net price of silver, not just its relative performance, went boom off the page. I mean, it left gold behind. Gold was still rising, okay, but silver just went whoosh, okay. Exact same thing happened 2010. Like in September of 2010, silver had already been rising for years, so had gold. The spread broke out again. Said silver's, I'm back, okay. And by April of 2011, silver had gone from 28 bucks to 50. From that point, we're at that cusp right now, where if you go through that level that I just mentioned, and
1.
we're nearing, 1.31, you get above that, there's a vacuum between you and 2%. And that's not necessarily resistance. That's just a level we've been at 20 of the past 50 years, okay? So it's hardly exciting to get there. But that is enormous. So that's why I'm emphasizing silver, because I think silver is vastly undervalued. And you could even see it on the price chart I've got there.
Yeah. And we'll show that chart.
Yeah.
I mean, is that how you know when to start taking profits and when to sell?
No, it's when if you're not in, where to initiate positions. Okay. I'm already in, and our subscribers have been handheld for the last years. We got bullish in February of 2016, two and a half months off the bear low.
Yeah.
Annual momentum of gold and silver said, it's over, I'm going back up. Nothing has changed the annual momentum of gold and silver, very long-term trend metric, okay. Nothing has altered that view. So it's been an ongoing bull for 10 years. And we're now at the point, I think, where the acceleration phase, the dramatic phase, where half the move occurs in 6 months, is about to occur. And I think for silver, it's likely to take us at minimum, I'm talking like sometime in next quarter, first quarter of next year, to 100. And if, on the other hand, in the first 3 months, don't be shocked if this happens, meaning 8, 9, 10, okay, if we get up near 100, then I think we're going to about 200. And
wow.
No, it's not insane.
Because I mean, gold would be at 5,000-6,000 at that point.
Gold might be 8,000 by then, but if silver were 2% of $8,000 gold, let's say gold does the routine again. Okay. 2% of that's 160. Is that right? Yeah. Okay. I mean, you get the point.
One of the biggest frustrations investors have is taxes. You make the right call on a stock or that explosive crypto trade, and then boom, half the gains are taxed. You took the risk and won, but the government takes their share of your gains. That's why I'm excited to introduce our sponsor of the pod, iTrust Capital, the #1 crypto IRA platform in America. They've built a self-directed IRA platform where you can actually buy and sell crypto, gold, and silver inside a tax-advantaged IRA. Trades inside an IRA are not taxable events under IRS rules. And I think the best part about iTrust Capital is they use the same institutional grade custody for crypto that BlackRock relies on. Now that's peace of mind. And they do it with no monthly fees, just a simple 1% transaction fee. Real US-based customer service, security, and real tax advantages. iTrust Capital gives US investors the ability to hold the actual assets like gold, silver, and crypto directly in an IRA. You can fund an account with a cash contribution, transfer an existing IRA, or even roll over an old 401k or employer plan to take more control of your future. So if you're looking to protect and grow your retirement with crypto, gold, or silver, check out our custom link in the description and be sure to use the promo code PINNACLE8 to claim your $100 funding bonus when signing up and funding a new IRA with at least $1,000. As always, all investments carry risk, and this isn't financial advice. Now, let's get back to the pod.
But also, when you look at the silver chart, it's very important because that log scale gold chart, I've got this red arrow going up over the 5 decades. It's been wave after wave, but higher and higher and higher. Silver, you could draw a line sideways through 1979. And, we had 2 peaks at 50. We're only marginally out above that now. And so it's been caught in a 50-year range.
Oh, the buildup is, it is. It's primed. And I mean, what can you buy? What costs the same as something that you can buy in 1980?
No.
Nothing. I mean,
not even a loaf of bread. Nothing.
And I mean, adjusted for inflation, we got a long way to go to even reach a new all-time high in silver. But to my just further, I mean, it doesn't, once it goes through that 2%, to 3%, it doesn't last long up there. That's kind of
No.
what I meant.
That's a question. And this is what we're arguing. We think this is a shift to a new reality and price level for silver, meaning when you move out of this zone we've been in for 50 years, okay, and you go to $100, $200, you're not coming back to 50. You're going to live in a new range. Yeah, there will be sell-offs in that range, but the level has got to be sought out first. And frankly, you can look at a monetary degradation issue, like you mentioned, the money supply increase. Well, if you compensate for that, we'd be $200 easily. Okay. But there's some other charts I've included too that sort of smack you in the face. The next set of charts that I sent is three simple, stupid commodities. Okay. These charts are all from the Federal Reserve of St. Louis, Fred. Okay. Yep. And one is the top chart is the price of lead. Okay. Going back to the late 1980s. In fact, you could go back to 1980, and you'll see that the first phase of that price action is the arrow on the left at a very low level. It just goes for decades sideways. It sort of looks like silver today, where it was in 1980. Okay. But look what happened to lead. It just suddenly went boom and quadrupled in price. Not because of a crop failure. Okay, we're talking a base metal here. Wheat can explode because of a crop problem, but a base metal doing this. And by the way, other metals did the same thing around that time. But it went to a new reality. And yes, then it dropped off again. But look at the new reality that's prevailed since then on the lead chart at a much higher level, horizontal for decades.
Yeah.
Silver's still in the first range. Okay. Then the second chart's copper and copper products, as the Fed calls it. They incorporate products of copper. Same story. Multi-decade range at a given level. Then suddenly within a matter of about 6 months, you move into a quantum, to a new level, and you go sideways again, but at a whole new reality of price. And now copper's at all-time new highs, above even the 2011 high, which silver has only just done. Okay. The bottom chart is beef. Okay. Pound of beef. Okay? Oh. Look at what it's done since.
Don't get me started. Go to your butcher.
It goes up in layers and then it jolts and in a new reality. Silver's about to enter that new reality. And we know its fundamentals. We don't focus on that, but we know that they've been tight for years. They get tighter. Industrial demand is continuing to rise because of solar and the solar cell stuff. And also AI is creating a lot of demand because silver in micro forms is used throughout the whole system. And yet supply is not increasing. In fact, silver has a unique attribute in that most of the silver that's mined does not come from silver miners who are motivated, of course, by a rising price of silver. They come from people that mine magnesium or lead or zinc or copper. So, it might be a marginal issue for them to increase silver production because, frankly, it's just a byproduct of their copper production, et cetera. So they're not motivated by rising prices. Silver has a unique fundamental game. The question is, when is it going to do it? We think it's begun.
And you don't have a timeline specifically associated with that?
I think most of the profit-making phase of the shift, the easy part, is when that spread breaks out.
Okay.
And yes, I think it could be this month. Frankly, this week, if you close where you are now, the spread momentum is already breaking out on a weekly basis. But when you go to a monthly close, we wait for the end of the month. And if you're above that 1.31% level by the end of this month, which is no big deal, we could be there in 2 days, okay? Count on it. Assume that, launch just began via this spread metric. Price is already in acceleration. That's fine. But the point of going crazy was defined in 79 and 2010 by this spread. And I think we're on the cusp of that. And that's where in the next literally handful of months, most of it occurs.
Incredible. And where do you see the buying come from? Do you look into that? Do you care so much about that? Not really.
I frankly don't care. We see these CFTC reports and we hear these stories about this, that, or the other shortage in this exchange and so forth. That's all just facts of reality. They've been out there already. They're now just getting more accentuated. And those aren't necessarily good timing mechanisms for when to buy or sell. Those are just factors in the background that have been percolating already. And the point where they go to boil is when the spread breaks out, is what we're arguing. And I think we're on the edge of that. And I just think silver is going to do what's sort of normal. In other words, it made a mistake. You look at those charts that we showed there. You know, how come you go from level A to level D in a matter of 6 months? Obviously, the market had not discounted something properly and suddenly said, oh, I got to price that in. Well, you know, probably the factors that caused that move were already known. The question was when.